us. And we will have to finish up with our awesome information that we've been going over with Bill Friedman of Friedman, Thompson and Associates. Let's make sure they can get a hold of you, Bill, because I know everybody's going, wow, has there been a lot of changes? I mean, you should see these pages we have. It's ridiculous. We cannot go over enough information for you, so you should just call Bill. Bill, how do we get a hold of you, buddy?
You can call me at 661-222-2988. You can send me an email at Friedman, F-R-I-E-D-M-A-N, at ftcpa.com. And those are the best part.
What's your phone number again?
661-222-2988.
That's Bill Friedman with Friedman, Thompson and Associates. He's an expert out here for 27 years, not a practicing person for 3 months when it's that time of the year. Because, well, let's see, how long do we have till we can start filing our taxes?
Well, this is the latest start to a tax filing season I could ever remember, because all the changes took place after the year ended already. So we're redoing the tax programs and getting them all ready to go. And IRS isn't even accepting returns until January 30th.
Oh, wow. The key thing that we've been going over, if you just tuned in with Bill Friedman of Friedman, Thompson and Associates on the Don and Gino Real Estate and Finance Show, is there are tons of changes. Am I right?
Yes, there are.
So there's no way we couldn't even touch the surface.
All these pages. I had like 26 bullet points, and we've only been able to cover about 5.
Yeah. You need to reach out to Bill. That's all I can say, or reach out to us, Don and Gino at gmail.com, because you may be missing out on some great opportunities, and you should just know you need to talk to a professional.
Actually, that's really interesting, Don, because I know we're ragging on the seasonal tax preparer a little bit. So if you're a seasonal tax preparer, sorry. But reality is, with so much change, if they took a test or a course 6 months ago, it's all outdated.
We know more than they do right now.
Yes, we do. You do, because you're listening to our show.
That's right, and we thank you for that.
That's why you want to choose a tax preparer that specializes in preparing taxes as well. There's a lot of professionals out there that are trying to actually do mortgages now and sell investments and also prepare taxes. And with the tax laws changing like this on a yearly basis, it's impossible to stay up with it.
Insurance agents. Is there a reason insurance agents always have tax preparations in there? That seems to be a common thread.
They're just
really sure.
They're just nailing their database is what they're doing. And we have learned, I've learned this, Gino, actually you helped me with this, is being just really focusing on what you do best. We focus on mortgages. We are the best. I will challenge anybody in this valley about how to prepare and strategize your mortgage debt in any way, shape, or form. Whether it's buying a new home, we are experts at that. If it's buying a bigger home, we'll make sure you strategize correctly with your current home. If you're thinking about investing in a home, there's so many different strategies you can do, along with those strategies using the correct tax advantages and how to prepare properly. So that's why you need to talk to professionals like Bill Friedman here.
Yeah, in fact, we were talking about what we wanted to bring up next we were talking about the layering of taxes. Yes. That's kind of what we were talking about, is that all of these different types of taxation take place at a different wealth amount, at a different adjusted gross income.
To clarify, we have a graduated tax system.
There you go.
And the confusion is, I have clients asking me all the time, if I'm going to go into this higher tax bracket, maybe I should just stop working. And I keep trying to explain to them, well, that's not really how it works. You're only getting taxed on each additional amount of income. So once you get to the 39.6 tax bracket, each additional amount over that certain threshold is taxed at 39.6. But below that, your income is being taxed at 35, and then there's the 28% bracket and the 15% bracket. There's even the 10% bracket. The 10% bracket is your first $10,000 of income you earn. That was set to go away at the end of this year, but the new Taxpayer Relief Act of 2012 actually brought that back.
So that's good news.
There's actually some good news in this new tax law as well. It seems like the rich, and defining rich is still confusing,
right,
but the rich are going to have more taxes to pay. But everybody below the income tax rate of $400,000 or $200,000, depending on which law, there's actually a lot of savings in this new tax law.
Right.
And just for example, the child tax credit of $1,000 per kid was set to be drastically reduced at the end of this year, and they extended that back. So now we've got the same $1,000 credit per child under a certain amount of income level. That was going to be a big one.
Wow.
American Opportunity Credit for deducting tuition. That was going to be drastically reduced, but that was reinserted. And educator expenses, if you're teaching, you could write off some of the supplies that you provide out of your pocket. That was going to go away. Now teachers can write off their supplies.
Good news. Good news
Which
for
is
our
really
teachers.
important now because they don't. I know for a fact they don't have the budget to get everything from the schools. So a lot of the teachers spend their own money to make sure they have what they need in the classroom.
Correct.
So number one biggest tax reduction we've seen due to this act.
Nobody really talked about it that much.
It was quiet, wasn't it?
And this is something that's kind of a consolation prize for the rich. And the rich are all complaining. We're all complaining about all these additional tax rates we're going to pay. But there's this big prize at the end of the game that came back, and that's the estate tax law. And at the end of December 31st, 2012, the estate tax exemption was $5 million. It was going to be reduced back to $1 million.
Wow. Oh, it's just a $4 million difference.
$4 million
Holy
difference. A married couple can now, it's back to $5 million. A married couple can effectively avoid estate tax on up to $10 million now if they do it properly.
So that's eight.
With this bill didn't take place, they were only going to be able to protect $2 million. So now a couple who has a $10 million estate will be able to avoid paying estate tax on the second to die of up to $8 million in assets. The tax on that is roughly $4 million. So a couple with an estate of $10 million effectively is saving $4 million in estate tax now
Which will
because of
much more,
this bill.
Which will much more than offset the 3% increase in their adjusted gross income.
Exactly. So the real people are paying that are getting hurt by the new law are the spenders, not the savers. The rich that make a lot of income but spend a lot and aren't saving a lot, they're paying more in tax, so they're going to have less to spend.
But I think that's actually not a bad thing because what they're doing is they're encouraging the rich to invest in our country and to create an estate rather than to just spend frivolously.
Exactly.
I like it.
I like it. And if any of you out there are trying to, have those kind of assets, those $10 million, I am willing to be adopted. Just trying to help you out there.
And can they deduct that $1,000 child credit if they adopt you?
No, if they make that kind of money, the credit's phased out.
Wow. Okay, so see if you just tuned into the Don Gino Real Estate and Finance Show. We're talking with Bill Friedman of Friedman Thompson and Associates right here in Valencia, and he is a tax expert. He will help you strategize your taxes correctly. I mean, he just talked about a difference of $8 million if you didn't know how to properly structure your taxes or your estate. I mean, there's so much more to it. We can't even go into it. We've touched on, unfortunately, 5 topics, Bill, out of like 25 to 30.
A small portion of the changes.
Yeah, Bill's got a stack of papers this high that you don't want to go through, and even if you did, you wouldn't understand it. Because I know Gino and I, we look at probably more tax returns than I guarantee H&R Who, and you need to go to a professional. Not trying to pick on them, but our goal is to help guide you to personal financial wellness. That's getting great advice, getting great information to make educated decisions. And Bill Friedman, you were here and gave us great advice today. Thank you very much.
Thank you for having me. This was fun.
And you can check out this show. Believe it or not, this show will be ready to take these nuggets. If you went, what did Bill say again? In just about probably 10, 15 minutes, you go to www.donandgino.com, click on the Listen Live button. That portion of the show will already be ready because we're heading in just a few minutes to our real estate hour with Pam Ingram. So we want to thank you again, Bill.
Thank you.
All right.
Great information, Don. Tons of savings, a little bit more spending for the rich, which we've now defined, but tons of savings. I'm really interested. We're going to start putting some strategies around how to purchase more property and avoid taxation with that.
That's right. So make sure you reach out to us at 855-DON-GINO. We want to thank you for joining us in our Finance Hour. Coming up is our Real Estate Hour with Pam Ingram and some incredible information about real estate that